Hey everyone, and welcome back to the Tesla Stock Podcast. It is earnings day for Tesla, but just hours before the company reports its results, the headlines are filled with recalls, regulatory probes, and a full-blown shareholder revolt against Elon Musk's leadership and his potentially trillion-dollar pay package. Can even a record-breaking quarter overcome this storm of controversy and concern? With the stock trading around the $442 mark, let's dive into the pre-earnings drama. Our first story is a double dose of regulatory trouble hitting Tesla right before its big day. First, the company announced a recall of nearly 13,000 Model 3 and Model Y vehicles in the U.S. This is due to a defect in a battery pack component that could, according to NHTSA, lead to a sudden loss of drive power, increasing the risk of a crash. Tesla says it's identified dozens of warranty claims related to this, but isn't aware of any injuries or fatalities. They'll replace the affected part free of charge. While a 13,000 vehicle recall isn't massive by auto industry standards, it comes just weeks after NHTSA opened a much larger and more significant investigation into Tesla's full self-driving system. That probe, covering nearly 2.9 million vehicles, is looking into over 50 reports of FSD, causing traffic violations, including running red lights and driving into opposing lanes, leading to crashes and injuries. This recall, combined with the ongoing FSD investigation, paints a picture of increasing scrutiny from federal safety regulators. It puts pressure on the company's core technology narrative and raises questions about execution and quality control at a time when Tesla is asking the world to trust its push towards full autonomy. These aren't the headlines you want just hours before reporting financial results. And the pressure isn't just coming from regulators. It's coming from Tesla's own shareholders. Our second story is the launch of a major new campaign called Take Back Tesla, a powerful coalition of unions, corporate watchdogs like Public Citizen, and major institutional investors, including the officials overseeing state pension funds in places like New York and Colorado, have joined forces to urge shareholders to vote against Elon Musk's proposed new compensation package. As you know, this package could be worth up to $1 trillion and is tied to achieving incredibly ambitious goals over the next decade. On their new website, the Take Back Tesla campaign calls the package outrageous and accuses the board of enabling Musk's damaging political activities and allowing him to be a distracted part-time CEO. They argue the board lacks independence due to its close ties to Musk and has failed to hold him accountable. This campaign is significant because it's an organized, well-funded effort targeting not just the pay package itself, but the underlying corporate governance issues at Tesla. Adding fuel to the fire, the two major independent proxy advisory firms, ISS and Glass Lewis, have also recommended that shareholders vote against the plan. While Tesla argues these firms have consistently opposed its proposals and points to the massive stock gains since 2018, this unified opposition from shareholder groups, state officials, and proxy advisors creates a major hurdle for the board ahead of the shareholder vote next month. It highlights a deep and growing divide about the direction of the company and the accountability of its leadership. All of this drama sets the stage for our final story, the third quarter earnings report itself, due out after the market closes today. Now, on the surface, the numbers should look pretty good. We already know Tesla delivered a record-breaking 497,000 cars, easily beating expectations. Analysts are forecasting adjusted earnings of about $1.9 billion. However, even that strong result comes with caveats. It's still significantly lower than the $2.5 billion Tesla earned in the same quarter last year, reflecting ongoing margin pressures. And the bigger problem is what lies ahead. That record Q3 delivery number was supercharged by the expiration of the $7,500 U.S. federal tax credit. The consensus is that this pulled forward a massive amount of demand, setting up a potentially brutal fourth quarter and a challenging 2026. Making matters worse, the Trump administration has also eliminated the federal penalties for automakers who miss emissions targets. This effectively kills the market for regulatory credits, a business that has brought Tesla $11 billion in nearly pure profit since 2019, and was sometimes the only thing keeping the company profitable. This is a double whammy, hitting both future demand and a key historical profit driver simultaneously. So, the key thing to listen for on today's earnings call isn't just the Q3 results, it's the guidance. How bad does the company expect the Q4 demand cliff to be? How will they offset the loss of billions in regulatory credit revenue? And crucially, how much progress has actually been made on the robo-taxi and Optimus initiatives that are supposedly justifying the stock's astronomical valuation? Expect Elon Musk to downplay the near-term headwinds and focus heavily on the AI future. But investors need to listen very carefully for any concrete details or timelines amidst the hype. So, to sum it all up, right before earnings, Tesla is hit with a new vehicle recall and faces an expanding federal probe into the safety of full self-driving. A powerful coalition of investors and watchdogs has launched a major campaign to defeat Elon Musk's trillion-dollar pay package, citing deep governance concerns. And while the Q3 delivery number was a record, the earnings report today will be overshadowed by major questions about future demand, post-tax credit, and the disappearance of a critical historical profit source. So, the big day is finally here. My question for you is, what is the single most important thing you'll be listening for on the Tesla earnings call today? Is it the Q4 guidance and how the company plans to navigate the demand cliff? Is it the impact of losing the regulatory credit revenue? Or are you purely focused on any updates, no matter how small, on the robo-taxi and Optimus progress? Let me know what matters most to you in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and good luck navigating the earnings volatility.